Hello, good morning to all. Welcome to today's Daily Dose of Market Insights. I'm Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Today will be Thursday, the 7th of December. So before we start our Daily Dose of Market Insights, let's take a look at the usual disclaimer slides first. Okay, leverage trading carries a high degree of risk and may not be suitable for everyone. This presentation is for general information purpose and is not investment advice. This documentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product, and as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product, and as well as this advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, yes. So before we, okay, give me a minute. Yeah, so before we start, the jump into the short-term technical outlook on we call it the various asset classes that I shared on a daily basis, ranging from the broad-based stock indices, the FX market, as well as gold and oil. Let's have a recap of what happened last night first during the European session. So firstly, the European stock indices continue to be very bullish. The German 30 move within our short-term technical outlook expectation, where the German 30 or the DAX benchmark index for the Germany stock market rose to fresh all-time high yesterday. But however, that doesn't translate to an entire bullish outlook on the US stock market. So if you look at the US stock market, initially it actually rallied due to a weaker than expected ADP job data. So what's this ADP job data? So ADP job data is actually a prelude to tomorrow official compound non-farm payroll data by the US government. So ADP data, take the point that it's actually a privately corporation compiled job data that released 2 days ahead of the usual US government compound non-farm payroll data. So if you look at the US stock market heat map, over here, like I share with you the heat map of the S&P 500. So you could look at my screen over here. What you could see over here is that this is the carpet, I would say the carpet chart or the heat map chart of the S&P 500. So overall, the laggards still seems to be centered around the 7 mega cap stocks that is showing lackluster earnings yesterday. Lackluster performance yesterday, pardon me. Okay, so what we could see over here is that they actually dragged down the Nasdaq 100 to actually cause it to underperform, and even some of the cyclical sectors like the financial stocks also underperformed yesterday as well. Over here, industrial managed to hold the fort yesterday. So all in all, if we could look at the index as per se, over here is that they actually all of them actually closed in the red, with the underperformer coming in the Nasdaq 100 negative 0.56%. Even the Russell 2000 also down negative 2.1%, 0.21%. The one that is holding the fort slightly will be at the Dow Jones Industrial Average negative 0.19%. And overall the S&P negative 0.39%. So what I could see over here is that since the very strong steep medium-term up move that kickstarted in late October all the way up to the month of November, in the bullish tone has started to be getting a bit lethargic at this point in time. So later I will share with you some intermarket correlation we've got to be aware of as I touch on the short-term technical outlook on the Nasdaq 100 and the US Wall Street 30 later. Okay, so other key event to take note or key news to take note of be oil price. So oil price actually plummeted yesterday to a 4-month low, to June lows. To retest is coming close to the June low. So WTI crude oil, the West Texas oil, actually broke down below 72.40 US dollar per barrel. So that is actually a medium-term support that we highlighted in our daily dose of market insight since 2 weeks ago. So in the short term, oil seems to be pretty much on the bearish side right now, given the fact that most of them seems to be driven on the momentum trend rather than fundamental factors yesterday that caused oil price to actually went down is due to the fact of the weaker ADP numbers from US. But also on the other hand, US inventory stockpile also reduced as well. So the thing about oil price trading right now is more driven by the fact that market participants has this herding behavior on the downside due to a weaker external demand that going to be sticky spreading into Q1 next year. So that is the primary factor that is causing this short to medium term weakness in oil price. Okay, so now let's look at the economic data yesterday. So like I mentioned yesterday, we see the release of the ADP number over here. Yeah, ADP Employment Change. So markets expecting an increase of 130k jobs added for the month of November, but it only came in below 103k. So if you look at the trend of the ADP Employment Change month every month, we start to see softness in US job market since September this year. Okay, so you look at it over here is that the current 3 months of job added data came in below the average of the entire year, entire 1 year. Okay, so we could see over here is that softness. So that also increased the odds that US itself is now going to a kind of a more towards a soft lesser of a soft landing, but potentially into a recession into next year. All right, so that is the current economic job data trend on the ADP employment chain that is being reflected. Okay, so now immediately now let's look at the FX market. So FX market was rather mixed yesterday. So if you look at the chart of the FX market over here, so this is the 5. Okay, let me stress again now. This chart over here is the trend where I plotted the dollar against the popular traded currency ranging from the euro, the sterling, the kiwi, the Chinese yuan, the Sing dollar, I put as well, the CAD, the Swiss, and the Japanese yen. Okay, Japanese you could see over here. So this is a 5-day rolling chart. Okay, so it's a 5-day roll. Think of it as like a 5-day moving average, but probably according to relative performance. So we could see over here is a rather mixed picture on the entire FX market right now. Like I stress again, why mixed? Because right now we are approaching to year-end lower liquidity where FX pairs don't move accordingly as their usual behavior as we see in before. Okay, so we could see we start to see a very stark performance where dollar starts to strengthen against the Aussie and against the euro, slightly against the sterling dollar, but dollar remains weak against the Swiss and weak, much more very clearly weak against the Japanese yen. All right, so right now is that individual FX pairs is actually moving according to their own short-term dynamics against the we call it the usual what you call a price pattern behavior of the FX. So last time we tend to see that we start to see a uniform dollar weakness or uniform dollar strength across the board, but now it's not behaving this way for the usual month of December, where liquidity starts to get thinner and thinner as we approach year end. Okay, so right now so this is the FX market situation over here. So now before we jump into, now let's go into the short-term technical outlook. So for short-term technical outlook, let's start with the FX market first. So we know that the euro dollar continue to the US dollar continue to be getting stronger in the short-term dynamics against the euro. So now let's look at the euro dollar chart. Now I'm going through the short-term technical outlook on the FX market. So start with the euro dollar first over here. Okay, euro dollar. Okay, so now before that, let me expand my screen. All right. Okay, so for the euro dollar, since the start of this week, we flip into a bearish bias. Why? Because the short-term trend of the euro dollar has started to skew towards the downside by the breakdown of this minor ascending channel support on last Friday. Okay, which I drew over here from the low of 2nd of November, and price action going to inch down lower and lower, breaking below the 200-day moving average yesterday, as well as the 20-day moving average, but still holding above the 50-day moving average. So bear in mind, in trading view, we are able to plot higher time frame indicator like this moving average on a shorter time frame chart. So this primary chart right now is a 1-hour chart, but the moving average that you see over here is based on a daily time frame chart. So what I'm doing over here is doing a multi time frame analysis on a shorter time frame chart so that we're able to see two dynamics into at one chart. Okay, so we actually did not to flip between daily and hourly. Okay, so right now we will actually still maintain that short-term bearish outlook. Why? Because the hourly RSI representing short-term momentum is still on the negative side, which bearish side, where it fails to break above a parallel resistance right below the 50 level, and the RSI hasn't hit the oversold level yet, and there is no signs of any sign of a clear bullish divergence being depicted on the hourly RSI. So with that, it seems to us that there is much more negative elements than positive elements that's being displayed on the short-term dynamics in the euro dollar. So with that, still maintaining that short-term bearish bias, tighten slightly the key short-term pivotal resistance for today at 1.082, right at the 200-day moving average, and also confluence with this minor congestion area of 4th of December to 6th of December. So as long as this level is not surpassed to the upside, 1.082 is not surpassed to the upside, potentially the euro dollar could actually break below 0.75, exposing the next intermediate support level at 1.07, which confluence with the upward sloping 50-day moving average, and as well as this congestion area here from 8th of October to 14th of November previously. Only an hourly close above 1.082 will invalidate this short-term bearish outlook on the euro dollar to kickstart a potential recovery towards 1.09, then thereafter followed by 1.096 on the euro dollar. Okay, sterling dollar. So sterling dollar yesterday, we still do have we still maintaining that short-term bullish outlook, but however, we're now looking for a slight to come down very close towards 120 figure level. So a 120 figure level confluence with this upward sloping 20-day moving average and the 200-day moving average. So you see the dynamics a bit different. The sterling dollar still remains stronger than the euro dollar. Why? Because the price action still remains above the 20 and the 50-day moving average, whereas euro dollar has already taken down, as I showed the chart earlier on. All right, so with that, as long as this 125 figure key short-term pivotal support still holds, which confluence with the 20 and the 50-day moving average, potentially the sterling dollar could actually see at least a push up towards 126.65 intermediate resistance that we set for today. Okay, so still maintaining that short-term bullish outlook on the sterling dollar, holding above 125 figure level. But however, if we start to see an hourly close below 125 figure level, then this decline over here, this minor corrective decline since the 4th of December high may further extend on the downside to retest this 124.30 intermediate support. So what's 124.30 intermediate support? Is a former minor swing high of 6th of November, and as well as the ascending channel support that I draw from the low of 2nd of November. All right, so give me a minute. So with that, that's summed up for the sterling dollar outlook. So one more second over here is that on the Australia. Okay, let's move on to the other currency pair, the Australia dollar. So the Australia dollar over here continues to right now plunge down towards this 20-day moving average again. So we'll be still using that 65 figure level as a key short-term pivotal support level. So as long as this 65 figure short-term pivotal support level is not surpassed to the downside, but we will still maintain that short-term bullish outlook. But however, price action got to actually clear above 65.90. So this 65.90 is like an upside trigger level for today. Only a clearance above 65.90 will give much more credence to this short-term bullish outlook to retest this range. We call it a resistance at 0.6665. All right, 0.0665 slash 67 figure level. Okay, so 65.90 will be the upside trigger level. 65 figure level will be the short-term pivotal support to maintain that short-term bullish outlook on the Aussie dollar. However, if we start to see a breakdown below 65 figure level, then potentially we will start to see the start of this decline towards this extension of this minor corrective decline towards 64.50, which is the 50-day moving average, as well as this medium-term ascending channel support from the low of 26th of October 2023 low. There's also confluence at the 64.50 support level. Dollar yen. So for the dollar yen over here is that we still maintaining our short-term bearish outlook since the start of this week. So right now is since yesterday, or no, since Monday, it failed to break above this intermediate resistance zone of 64 147 60 147 25, but I don't want to tie it so tightly, so still using the the swing high of 1st of December last Friday, swing high that was rejected at 14840 level. So as long as 14840 level didn't surpass to the upside, we will still maintain that short-term bearish outlook on the dollar yen. Bears got to break down below 145.90 to give much more prudence for these bearish outlooks to expose the next support area at 144.95/144.80. So what's 144.95, 144.80? If you look at the daily chart over here, this is actually a very clear congestion area since 30th of June to 31st of August. All right. So now, giving with that in mind over here is that let us take a look at the stock indices market now. So before we jump into the stock indices market, there is actually a clear indirect correlation between the 10-year US Treasury yield. So you still recall that the benchmark US stock indices managed to stage a rally since end of October. This actually came in line with the softness in the 10-year US Treasury yield that has started to inch downward in the last 1.5 months or so. So, but if you look at the current decline of the US 10-year Treasury yield now, is fast approaching a key support level at 4.06/3.97. So this is also the 200-day moving average, coming very close to it already. So with that, right, I'll be much more hesitant, right, to actually maintain that short-term bullish outlook on the benchmark US indices, given the fact that since it's coming very close to this key support level on the US 10-year Treasury yield. So this is a US 10-year Treasury yield. If there's a bounce, so potentially there could be a bounce coming very soon on the US 10-year Treasury yield, at least back up towards 4.33 level. That was the former we call it support level, now turns broken, now turns into a pullback resistance, also confluence with the downward sloping 20-day moving average. So given that we could start to see a bounce over here, potentially the short-term bullish outlook on the US indices may be negated, at least in the short term. Short term, that means talking about 1 to 3 days. Okay, so now short-term technical outlook. Let us start with the Dow Jones Industrial first. All right, so for the Dow Jones Industrial first, you look at the since last Friday, that means 1 time, 2 time, 3 time. Yesterday it attempted to break out above this 36,240 range resistance that we highlighted since the start of this week, but it failed to break up. So this push up was due to the fact of that weaker US ADP job data. Then thereafter it traded down much lower towards the rest of the week. Toward the rest of the session, pardon me, not the rest of the session. So with that, right, it seems to me that we may start to see a triple top on the short-term chart. Okay, this is the hourly chart, not a daily chart, triple top on the short-term chart. So with that, the RSI also starts to remain weak as well. RSI also start to show shape lower low. Okay, over here. So with that, we'll be flipping to a bearish buyer's outlook in the short term for today, using 36,240 as my key short-term pivotal resistance. A breakdown below 35,930 potentially could see the start of a corrective pullback scenario, heading towards the next support zone at the next short-term support zone at 35,490/35,380. We also confluence with this upward sloping 20-day moving average. So all in all, right, what we are looking over here is a minor corrective pullback over here to retrace this rather steep rally that has taken shape since 10th of November. Okay, for the US Wall Street 30. But however, if we start to see an hourly close above 36,240, then this impulsive up move of this steep rally could resume to test the next resistance at 36,555, which is the upper boundary of this short-term ascending channel resistance that is placed since 10th of November low. Okay, so very similar, the Nasdaq 100 as well also failed to break out above this range resistance that is in place since 21st of November. So what we could see over here is that right now it's breaking below the 20-day moving average, so indicating to us that potentially right now we may start to see a retracement of this steep rally that started the low of 27th of October. All right, over here. Okay, so with that, we'll be using 16,160 as my key short-term pivotal resistance for today, looking for a break a push down towards 15,690. If 15,690 is being taken down on the downside and hourly close below it, will give much more credence to this short-term bearish outlook, where the price action will retrace this 1.5 month of steep up move. Next support level to watch will be at 15,380, followed by 15,175, which is so the 50-day moving confluence with the upward sloping 50-day moving average, the congestion area of 7th of November and 10th of November, and as well as close to the 50% retracement of this entire steep up move from 27th of November all the way up to last Wednesday's high at 16,160. Only a hourly close above 16,160 could potentially resume this bullish impulsive up move, with the next resistance coming in at 16,310, followed by 16,590. So overall, net, we are now flipping to a short-term bearish bias on the US major stock indices, on the Nasdaq 100, as well as the US Wall Street 30, due to number one, individual technical elements on these two charts has started to show signs of bearishness, and as well as intermarket correlation, where the US 10-year Treasury yield is now coming very close to a major support level, which is the 200-day moving average. Potentially, we could see a bounce, a short-term bounce on the US 10-year Treasury at this juncture, which could actually relate to an indirect correlation with the Nasdaq 100 and the US Wall Street 30. Okay, now, German 30. So German 30 continue its relentless up move, hit the first resistance yesterday at 16,660/16,700. So far, the RSI is not showing any signs of a bullish exhaustion. Pardon me. Continue to trade a series of higher high. Okay, higher high, no lower high. That means no bearish divergence. So all in all, what I could see over here is that yes, there could be a pullback during the European session, given the fact that it starts to exit from the overbought region yesterday during the US session. So I will use a Titan key short-term pivotal support level for today, 16,530, also confluencing with yesterday's European session, yesterday's low as well. Okay, Tuesday, okay, in fact not yesterday low, Tuesday swing low, as well as the median line of this minor ascending channel, this medium-term ascending channel that is in place since 27th of October 2023 low. Okay, so as long as this level managed to hold for today, potentially the German 30 could actually start to see resume its short-term bullish dynamic towards the next resistance zone at 16,780/16,850, which confluence with the upper limit of this medium-term ascending channel, as well as the Fibo extension cluster. Only a breakdown below 16,530 will invalidate this short-term bearish outlook to kickstart a minor corrective decline scenario towards the next support level at 16,310, which confluence with the lower limit of this medium-term ascending channel. Okay, so still maintaining that short-term bullish outlook on the German 30. Okay, Hong Kong Hang Seng yesterday still recall that we attempt to play that bullish minor counter trend rebound as long as 16,100 holds, heading into 16,500/16,680. So the minor corrective rebound has already met that resistance level. So with that, price action has a bearish reaction of this resistance zone here. So with that, very likely the Hong Kong 33 now is set to resume this medium term, this bearish impulsive sequence within its medium-term uptrend, that is within a short-term downtrend, pardon me, that is in place since the high of 21st of November. So with that, I'll be using 16,830, 16,680 as my key short-term pivotal resistance for today, flipping to a short-term bearish outlook on the Hong Kong 33, looking for it to test 16,100. A breakdown below 16,100 exposes the next support level at 15,800. Only an hourly close above 16,680 will invalidate this short-term bearish outlook for today to see another round of minor corrective rebound towards the next resistance level at 17,100. Okay, so flipping to a short-term bearish outlook today for the Hong Kong 33 index, as long as 16,680 is not surpassed to the upside. Okay, now let's sum up for the index. Okay, now moving on will be the gold price over here. So for gold price, no change. still using 2006 as my pivotal support level, maintaining that short-term bullish recovery outlook on gold. So right now there is very clearly going to be a upside trigger level, which is this swing high over here, okay, at 2036. So a breakup above 2036 will give much more credence to this recovery scenario, at least to retest 2006-7 intermediate resistance level. Okay, so still maintaining that short-term bullish outlook or slash recovery outlook for gold price after this Monday corrective steep pullback, as long as 2006 pivotal support holds. However, a breakdown below 2006 pivotal support could potentially see an extension of this minor corrective decline heading towards the 200-day moving average now and 50-day moving average, confluencing with a graphical support level at 1955. Okay, so still maintaining that short-term slash recovery outlook scenario for gold XAU slash USD. The only thing that I added on today is that potential upside trigger level at 2036. Okay, now, oil price. So for oil price right now, what we could see is a very drastic fall in oil price yesterday, breaking below 72.40 level, medium-term support level. So right now, oil price is now potentially heading to the crucial major support level that was formed since March this year, managed to rebound in May and June before it staged that 20 plus rally heading into the summer months. Okay, so but however, so this is a very crucial 66.35 major support level for WTI crude oil price. So this is the daily chart. So what's the outlook on the short-term chart with the hourly chart over here? So the hourly chart for sure, price action has really broken down below 72.40. So this level will be used as a short-term pivotal resistance level. So hourly RSI now managed to actually exit from the oversold region. So potentially there could be some kind of minor bounce coming into play. So the minor bounce over here, potentially, right, you could actually see somewhere around this level. Okay, the meeting line between, okay, so actually it's the meeting line over here between the low of this bearish Marabozu. Okay, so as long as 72.40 is not surpassed to the upside, oil price could still protect the West Texas oil on the hourly chart, we call it WTI crude oil in short, may potentially seize the next support level coming in at 67.55 on the short-term basis. So still maintain, so flipping to a short-term bearish outlook below 72.40, as long as any rebound is surpassed above 72.40, potentially WTI oil, West Texas oil could see further potential weakness with the next support coming in at 67.55. All right. However, a breakup above 72.40 level potentially sees the extension of this minor corrective rebound towards 74.37, followed by 76.70, which confluence with this downward sloping 20-day moving average. So flipping to a short-term bearish outlook on West Texas oil below 72.40 key short-term pivotal resistance level. Okay, so with that, before we go, let's take a look at the economic calendar to see what other data to look out for today session. So for today's Thursday session will be a rather quiet session for us. So just a while ago, we see the release of this China trade data. Okay, let me refresh. Oops. Okay, okay, pardon me. Okay, I think there is something wrong with the, yeah, good. Let me refresh it. Okay, so for today, just a while ago, okay, I'm not, yeah, China data. So China data was released. So the export number came in better than expected at 0.5 year on year, but however, imports wise weakened than expected, negative 0.6%. Okay, concession is expecting 3.3% year on year growth for imports for November. So given a weak import, actually indicate to us that domestic consumption in China tends to weaken as well. All right, given it's at negative 0.6% year on year growth for November. So other than that, what we see over here is during the European session, okay, this is the growth rate for GDP, but that is a lagging one. So this is already the third estimate, so not so important. So throughout the US session over here, yeah, we do have initial jobless claim, something to look out for in terms of to give an indication of the health of the US job market. So that will be at 9:30 p.m. Singapore time later. So other than that, it will be a rather quiet session for today. Okay, during the for the US session. Okay, so with that, that pretty much sum up for today's daily dose of market insight. So with that, we shall speak again tomorrow and have a great day ahead. Thank you.